There are 9 common ways that people in the crypto space, new and experienced alike, get wrecked. So how can we avoid them? Each of these pitfalls are easy to fall prey to, and they are just as easy to avoid once we are aware of them and stay mindful of them throughout our crypto journey together. Hello, I'm Crypto Casey, and in this video we will explore the 9 most common ways that people lose money in this space so we can identify and try to avoid these scenarios to be more successful in the long term. Let's hit it. Please be sure to check out our sponsors that help protect our crypto: WalletGuard, iTrustCapital, and Tangent Wallet. Download WalletGuard, a free browser extension that protects our crypto wallets from fake websites, hackers, scammers, and wallet drainers by simulating transactions before they happen and much, much more. Buy, sell, and trade cryptocurrencies as well as silver and gold tax-free with your own IRA or individual retirement account, or roll over your current 401k with iTrustCapital, and invest in your very own cold storage hardware wallet like Tangent Wallet. Their new Tangent Wallet is out now with a ton of cool new features. It has a sleek black matte design, is the size of a credit card, multi-currency, multi-chain, and it's by far the easiest crypto wallet to set up and use on the market right now, and it's extremely affordable. So scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. Number 1, treating crypto as a get-rich-quick scheme. I'm sure crypto piqued many of our interests initially after hearing stories of people throwing a relatively small amount of money into a project, like a couple $100, and then it becoming worth several thousands or hundreds of thousands, or in some case millions of dollars over a few months or even overnight. And although this sounds extremely appealing, it's not the expectation we should have when deciding to get into cryptocurrency. Sure, there are a ton of amazing stories out there about people making massive amounts of money in a short period of time, and 99% of it is absolutely luck. Why is it so? Well, first of all, the cryptocurrency market is extremely susceptible to manipulation. With crazy price volatility from being a brand new asset class, in addition to blatant and deliberate manipulated price movement, the crypto market valuations swing violently and radically. High risk creates potentially high reward scenarios. Coupled with drastic price movements, we can see how a lucky trade made at the perfect time into certain projects creates a perfect storm for some people to make a ridiculous amount of money quickly, assuming they take profits and retain some of the gains. And unfortunately, what a lot of new and experienced people alike fall prey to is putting a significant amount of cash they cannot actually afford to lose in the hopes of getting that lucky moonshot that makes them millionaires overnight. Treating crypto as a get-rich-quick scheme will leave most of us absolutely wrecked, so don't do it. Instead, set aside an amount of money for the long term and DCA, or dollar cost average, into positions. Dollar cost averaging is when we decide on a certain amount of money, like $10, we're going to put at a certain frequency, like once per week, into Bitcoin or similar, regardless of the price or other factors. That way we are building a long-term portfolio with less exposure to price volatility, with a proven strategy that way more people have used over the past few years to build massive amounts of wealth than the small percentage of people that just got lucky. And if you'd like to learn more about dollar cost averaging, check out this video guide for beginners by clicking on the link above. Cool. Let's move on to the next way many people in crypto get wrecked. 2, trying to time the market. We've all definitely fallen prey to trying to time the market by following so-called chart gurus, mirroring so-called trading experts' trades, making decisions based off of the Fear and Greed Index, jumping into projects based on key dates on their roadmaps, all in hopes of trying to time the market in order to buy at the absolute lows and sell at the absolute highs. And for aforementioned reasons, that being the crypto market is heavily manipulated, unless we get lucky, we will get wrecked by trying to time the market. No one can predict and time this market. Again, sometimes people get lucky, but even if we consider Plan B's 3-month winning streak at accurately predicting Bitcoin's price at the end of each month for August, September, and October of 2021, come November, his $98,000 Bitcoin prediction was off by nearly half. Imagine if we had gotten to positions under this assumption that Bitcoin was going to hit $98,000, but instead it dropped from the $69,000 high down to this past bear market's low of $15K back in November of 2022. Yeah, you would have gotten a one-way ticket to Rekt City. It doesn't matter which crypto expert, influencer, or guru we follow. No one has a clue what the price is going to be of anything in the future, and we are all out here making random wild guesses at best. So don't try to time the market or predict this market. Like we discussed earlier, dollar cost average into positions to hold for the long term. Believe me, your life will be much more enjoyable and carefree if you choose to adopt and stick to a long-term DCA strategy with crypto. Nice. And a quick word about Coinbase, the sponsor of this video. It's the largest publicly traded cryptocurrency exchange for beginners, and now has an advanced trading platform with highly competitive fees and deep liquidity for sophisticated traders all around the world to use, called Coinbase Advanced. Coinbase Advanced is easier than ever to access right on the Coinbase website and Coinbase mobile app. It's a great platform for advanced traders who perform their own technical analysis and want access to powerful tools to execute their trading strategies, from scalping to API trading. Place limit and stop limit orders, or utilize indicators, or perform technical analysis on advanced price charts powered by TradingView. Check it out. Simply log into your Coinbase account, click on the profile button in the top right-hand corner, click Advanced, and click this drop-down button to choose from their huge selection of over 550 cryptocurrency spot pairs, like Chili's. And here we have an advanced price chart, depth chart, order book, trade history, and the ability to place limit, market, and stop limits all in one clean dashboard. To place a limit order, click Buy, Limit, enter the price you want the order to execute, and choose the amount, and click Buy Chili's. Simple as that. Just by taking a moment to learn how fast and easy it is for advanced traders to start using Coinbase Advanced for trading, whether it's performing technical analysis and more. So sign up and log in using the links below to check it out, and to learn more, go to advanced.coinbase.com. Sweet. Number 3, falling prey to FOMO. People in crypto get wrecked when they fall prey to FOMO. FOMO is a popular acronym used in the crypto space that stands for fear of missing out. Most people probably got into crypto near the market tops because they had been watching the prices go up and up and up and up, and each leg up, the searing pain of waiting too long to jump in gets worse and worse until they finally FOMO in. They FOMO in, and it either goes up a bit more before crashing, or it starts crashing. Wrecked. Or another scenario people FOMO into is, let's say something big is on a project's horizon, like, I don't know, Cardano's smart contract launch. People FOMO'd into Cardano like crazy leading up to the super hyped up smart contract launch date. The price reached a new all-time high of about $3.09 a few days before, and then following the launch, Cardano didn't all-out crash, but it had a slow, painful downtrend until eventually falling with everything else on the onset of the last bear market. And here's a personal story of how FOMO got the best of me in the last bull market. I had been anticipating the drop of an NFT project, and I knew in the back of my head it was coming up that particular week, but didn't bother to solidify the date. And one day, I'm on Discord, and I see a message flash that the minting window was open, but just for a short period of time with limited NFTs per wallet. Without skipping a beat, I click on the link, connect my wallet, and long story short, pretty much ended up sending $20,000 to a scammer. Wrecked. And if I had been using WalletGuard, the free browser extension we mentioned at the beginning of this video, it would have warned me that the site was new with a low trust score, and before signing the transaction, it would have popped up in a clear, human-readable fashion exactly what would happen if I went through with it, which was sending ETH to a scammer in exchange for nothing. Crazy. So the FOMO is real, fam. Be aware of it, identify it when you start to feel it, and resist it, or get wrecked. Number 4, falling prey to FUD. People in crypto get wrecked when they fall prey to FUD. And FUD is a popular acronym in crypto that stands for fear, uncertainty, and doubt. People that capitulate to FUD sell most, if not all, of their positions in certain cryptos because of a few reasons. 1, maybe some bad media was released about the project, like a hack, failed or delayed launch, a founder leaves or got in trouble, or maybe a competitor hits the scene and starts trying to get market share. Sometimes people experience FUD from things unrelated to crypto that could affect the market, like a new COVID variant, interest rates increasing, or fears of a world war. FUD also happens if a person isn't comfortable with the sheer volatility of the crypto markets, and watching the wild swings of value of their portfolios causes them to lose sleep, so they just sell everything. Most of the time when people make moves based on FUD, they miss out on opportunities to make gains. So in the end, the best thing to do to avoid falling prey to FUD is, for each project we have and any project we are looking to buy, we can decide how long we want to hold the project, like if it's a short-term play, like a month or a year, or a long-term play, if we want to hold more than a year. Or we can decide at what price point we are going to sell it, like if it doubles in price, triples, or similar, then stick to your plan. And if you'd like to learn more about profit taking in crypto, check out this video guide for beginners by clicking on the link above. Sweet. Number 5, second guessing every decision. Sometimes even when we formulate a plan, like which project we're going to buy, how long we're going to hold it, at what price point we will sell it, and what we will do with the profits, once we actually take action, we second guess our decision. We start waffling, thinking, man, did I pick the right project? Maybe I should have gone with another one, or just put half as much in, or use the other half for that other project. Geez, I bought too high, or maybe I sold too low. Should have waited, or maybe I should undo the trade and think about it more. In crypto, it is very natural to second guess every move, and it's very tempting to want to revert decisions we made. So as we discussed previously, create a plan for each project and stick to it. Second guessing everything will leave us emotionally wrecked, as well as the value of our portfolio over the long term. Make a plan. Make decisions based on the plan, and stick to the plan. Great. Number 6, falling prey to scams. Scams in crypto are everywhere. Scamming is absolutely rampant in this space. There are scam comments below this video pretending to be me or claiming to be expert traders with trading bots. On Instagram, X, Facebook, Discord, Telegram, TikTok, and pretty much every media platform, there are scammers pretending to be me or claiming to be experts that will make you profits. There are scammers that spoof email addresses to make it look like it's coming from Casey@CryptoCasey.com and other popular crypto influencers or companies like Coinbase, Ledger, and similar. There are scam websites that are set up to look like the official ones to try to steal login credentials or your private keys. There are endless ways we can all get scammed. However, if we follow a few simple rules and stay aware of key things to keep in mind, we should stay safe. Basically, scammers want our login credentials to our crypto accounts, all of our financial accounts, our cell phone provider, our private keys, which can be in the form of 12 or 24 word phrases. They want us to install software on our computer they claim will turn a profit for us. They want us to click on links from text messages, email, or direct messages on social media to direct us to fake sites, or that will install malware on our device. And they also want us to send them crypto or cash. So I made a video guide for people in crypto about different products and services, some free, some paid, that we can use to increase the security of our digital assets, which you can check out by clicking on the link above. At the end of the day, if anyone asks you to install mining software or any kind of software that will make you profit on your device, or if anyone asks you to send them crypto or money that say they will generate a profit for you, steer clear. They are going to steal all of your money. And never, ever, ever give anyone or type into any fields on a web page or an email your 12 to 24 word seed phrase, because you will lose all of the crypto in that wallet, 100% of it. And if you want to learn more about how crypto wallets work so you can better protect and secure your funds, I made a video guide for beginners about crypto wallets that will make you have that eureka moment where you finally understand the importance of your wallet phrase. So check it out by clicking on the link above. The bottom line is, if anyone is claiming they can make you money that involves sending them money, installing software, or clicking on a link to sign up for a product or service, they are a scammer. So watch out, stay mindful, and remember, I nor any other influencer will ever ask you for money or crypto. Not ever. A golden rule of thumb is to never send money or crypto to anyone you do not know personally or have never met in person ever, unless you're willing to lose it all and get wrecked. Number 7. Not doing your own research. Many people buy crypto projects based on recommendations of crypto influencers, their friends, family, advertisements, or random people they chat with in person or with on the internet, which is fine unless we decide to buy it without doing our own due diligence and personally taking the time to research the project. Jumping into a project without doing your own research will usually leave us absolutely wrecked. So like we discussed earlier, do not FOMO in because we could potentially be getting scammed by someone, or we may find ourselves in a project that we don't want in our portfolio. When we hear about a new exciting opportunity, take a day or a week or so, however much time we need, without rushing into it. And if we decide based on our own research that it's a good match for us, decide how much we are going to buy, how long we are going to hold it, or at what price point we are going to sell it. Then start dollar cost averaging into a position. Nice. Number 8, rushing through complex processes. Rushing in crypto will get us wrecked. Rushing through complex processes like new NFT mints, staking, yield farming, trading on decentralized exchanges, and all kinds of different crypto activities available to engage in will leave us wrecked if we rush. Just like how I rushed into the fake NFT mint, got scammed out of 20K, all because of FOMO and rushing around capitulating to FOMO. I've had friends rushing around trying to buy $100 worth of a crypto on a decentralized exchange without realizing the gas fees were $200. And it's not until you rush through and realize you lost money on the trade until it's all over with. Or some people accidentally end up on the wrong site, connect their MetaMask, get scammed, and once they realize it, try to rush and send everything out of their wallet thinking they are going to beat the scammer from draining their wallet. And little did they know, because they were rushing around, the website ran a script where basically no matter what recipient address you paste to make the transaction, it reverts back to the scammers, and you end up sending all of your funds in your wallet to them anyways. That's why it's important to take your time, double and triple check the wallet addresses you are sending funds to, and remember, if you accidentally send money to a scammer and did not give them your seed phrase or private key, they don't have access to your wallet depending on the type of transaction that occurred, if it wasn't a wallet drainer. In a case where you accidentally send money to a scammer and they don't have access to the wallet, check out the wallet guide I mentioned earlier, and using another app, you can restore access to your wallet, then safely send the funds elsewhere if you choose to do so. Great! On to our final common way people get wrecked in crypto. Number 9, treating crypto as a set it and forget it activity. Crypto is a new emerging type of digital asset that is still extremely volatile. Staying up to date on the latest news, regulations, project development, hacks, technology, tax laws, etc. is crucial to being successful in this space. Treating crypto as a set it forget it strategy is a one-way ticket to REKT City. Now, although it may sound overwhelming, there isn't a lot of daily or weekly maintenance actually required. With a potentially significant amount of upward price action, the upkeep is extremely worth it. And if you haven't yet, you can check out my video guide on the 3 things we can do daily to experience long-lasting success in crypto by clicking on the link above. In it, we explore my daily routine when I'm on vacation or have other work commitments outside of crypto, as well as the sources I use to make the process simple and easy for beginners, inexperienced people alike in crypto. Awesome! If you would like to learn more about how WalletGuard works and how this free browser extension can protect our wallets when interacting with Web3, check out this video. If you would like to learn how to use Tangent Wallet and transfer crypto off of exchanges to our own cold storage hardware wallets, check out this video. And to get your very own Tangent Wallet, click on the link on the screen. Like and subscribe for more. Be safe out there.